Okay, nice. We're not late. Hello, hello. How about them liquidations, says Flary Roider. Yes, indeed. How about them liquidations? Can you hear me? Can you see my screen? Is the music volume okay? Okay, sweet. First time music? Yes. I really want to slow down my live streams. I'm so sick of rushing through them to just scream content at you. So we're just gonna take it slow. You know what I think the issue is? I'm like sick in the head. So when I watch YouTube videos, I watch all of them at 2 times speed. Any video, entertainment, educational, whatever. I only watch YouTube videos at 2 times speed. And I just think it affects I think it affects how I present my own content, because I just rush, you know. So I'm gonna try to mitigate that a little bit, if possible, and if not possible, then oh well. Before we get started, thank you to the show's sponsor, which is Bybit. You may find their links in the description below. Thank you to Bybit for their support. Make sure to like the video, subscribe to the channel, you know the drill. And yeah, let's get into it. Good day, Michael, what's up? No, there's no heavy pipe. Pretty Panda, no heavy pipe at all. How's everyone doing? Happy, sad, disappointed, pleased? Yeah, looking at the FTX wick here. Got Coinbase, got a whole bunch of different feeds. I've got a different watch list for futures and all sorts of things. Let me see what the sentiment is like. Gainsey suspended, it's incredible. I bring back Gainsey, free Gainsey. I did not have 10 cents stinky bids on Cardano. Your spot holdings took a hit. Business as usual, says Raman. Yes, indeed. You got liquidated. Okay. Hi, Cred. Hi, George. Are you a pro trader? No. No, not at all. Gainsey got banned because he didn't compile the modules? Yeah, so it would seem. I'm down my yearly salary. Nice. Pretty reasonable. XRP chart? Yeah, we can look at an XRP chart. Do I know any pro traders? Nope. All my friends are shit. Я выжил в этом падении. Ну, молодец, Евгений. Я тоже. Okay, cool. Let's chat. Let's work our way down a few time frames. Do I work in law as a day job? No, I do this as a day job and a night job. It's been a 24/7 job, actually. Okay. So, when I look at this, I like to think one thing that kind of keeps me grounded is what is broken or what has been broken, right? Rumi, I was being sarcastic. I mean, I don't know what a pro trader is, but I mean, I trade full time. Does that count? Yes, I trade for a living. And also, I command an army of Ethereum scam bots on Twitter. So when you see those Uniswap giveaway bots, they're all under my control. That's really my main income. Trading is just window dressing for my mastermind operation. Send me 1 ETH, I'll send you 2 back. All over it. Thought on Kraken's wick on ETH? Kraken just... It's consistently disappointing. with how far the market goes, or how far it doesn't go, I suppose. Natasa says, what would be the best method of portfolio hedging without the need for constant monitoring of the position? I don't know about not having to constantly monitor. I mean, that really depends. In terms of hedging, it depends how you want to get paid out and what tools to use. I'd say the most straightforward one is to use an inverse futures contract and to 1x short, or if you don't have all your capital on there or whatever, short whatever your holdings are, ideally on not high leverage. And that's it. Short side positions or options. Yeah, I mean, I'm talking about the stuff that I actually know about, not options. So shorts benefit from the convexity that's built in to inverse futures contracts. But yeah, that's probably the simplest way. Okay, I want to cover Bitcoin first, then we can have a bit more chat, and then Ethereum, a bit more chat. We'll really take our time. So, big wick, big move, right? Let's just get that out of the way first. This is like 18%. Derivatives went further, of course. So like 20%. It's a sizable pullback, right? It's not your typical kind of big bull market, multi-day or week-long 30-40%, but especially in the scope of a day, this is quite big, right? So there are two levels that I'm really interested in, and everything else is noise for now. And they are the following. The first just comes from the daily time frame, which should come as no surprise. If we look at our most recent leg up, where we made our highest high or the all-time high, we can sort of work backwards and ask ourselves, like, where did it come from, or what's the origin of the move? And we can just use this consolidation. And these consolidations, although not amazing levels on their own, they've been pretty good on the way up. So we had another one here. You remember I made a short video about this one with support being at 47. That ended up being really good, although I cut that trade hella early. Nonetheless, when the market gives you these, you kind of just have to work with them until they're invalidated. Especially in a market that's just trending very strongly and not spending a lot of time between these kind of trending legs. You sort of need to work with what's given. And a lot of the time, what's given is these daily clusters, demand zones, ranges, consolidations, whatever you want to call them, right? So I don't think this is any different. And of course, as the market trends up, those consolidations move up alongside with the market. So this was a breakout level, then the market consolidates and breaks out again. You basically move up the breakout level as price develops, right? So we don't kind of keep the one from here. I mean, we do as support resistance, but if you're kind of trailing your stop or trying to get a more recent understanding of where the market is, you want to keep track of these structures as they develop, right? So what does that mean for Bitcoin right now? Well, until it hasn't broken support for now. Like, it had a long wick, etc., but the daily close looks like it's going to retrace most of that. And support at 51, 52 remains intact until proven otherwise, right? I think the 4-hour makes these structures really, really clear. So bear in mind, these are daily time frame based levels. We can kind of take a look on how they look on intraday time frames, and it's actually pretty clear, at least to me, in terms of levels that are important. So on the 4-hour, it becomes really clear that this is the consolidation before the big breakout, just like we saw on the daily. The difference is, on the daily, it just looks like one candle, which makes it pretty difficult to take seriously. But on the intraday timeframes, you can kind of see a very well-developed range, and then a big breakout and a kind of retest of that range. So a bit more stock put in this structure. So that's kind of support. And I think if the market is going to look bearish, breaking this level would be very ugly, right? And I don't mean breaking it in the sense of like forced selling, billions in liquidations type of breaking. I mean just straight up a break of that level, right? Daily close below would probably be the best indicator, given this is daily time frame support. But either way, we can even roll with that. Daily close below 52, 51, or the pre-breakout level, we probably retrace a lot further. We kind of look in trouble, probably actually towards where we wicked on Coinbase, but more broadly, I'd say the first real stopping point is the daily level at 46. But I mean, more generally, whenever you get this type of structure, you get, big impulse, consolidation, big impulse, and it comes back, that's your bull market continuation pattern, right? And again, this is no small pullback. This is like, I mean, maybe 10% into the level, but 20% overall, right? So if for any reason this type of structure fails, impulse, consolidate, impulse, structure formed, comes back, rounded retest. This is like your A+ continuation setup, typically, right? So if A+ bullish setups are failing, that means that the market sucks or looks weak, okay? Or just has to find support lower down. So that's kind of my line in the sand type of area for the time being on the support side. 51, 52. I think the high time frame picture and trend continuation remains the more likely outcome, as long as that's the case. Now the question is, where's resistance, or where, you know, even if we do get a big bounce from here, where does it end up? And I've got like a similar structure at 59s, 55 to 59, which is basically the shelf we made before the breakdown, or the origin of the breakdown, or whatever you want to call it, right? So you could see this is where we had our cluster. Oops. We had a cluster, breakout, support, support, and then it broke down from here. So support turned resistance at 55 to 59. Daily levels a bit higher, you get some lower time frame support turn resistance a bit closer to market. So these are the range boundaries that I think are very reasonable to work with, and that will dictate my directional bias moving forward. So as you can see, like right now, if you're not positioned, the market's kind of in the middle of nowhere, and I think that's generally not a great spot to build high conviction views. So what kind of conclusions can we come to if the market moves into or away from these structures? I think if you want to get on the quote-unquote confirmation bullish train, I think any strong move through... Sorry, I said 55 and 59. I'm just blind. It's 55 and 55, obviously. There's not a 4,000 price difference between those two. My bad. 55k, right? So I think if price on a high time frame basis, again, daily close or 4-hour close, or just whatever time frame you use to ascertain strength, can make its way above 55k, and in doing so basically retrace the entire dump, including the origin of the dump, and turn that back into support, something resembling that. So high time frame, strong closes above 55. I think that's a really good continuation pattern, right? At that point, probably the most bearish case has failed. It would mean that support has held. It would mean resistance has been reclaimed. And I think at that point, you know, if you're kind of forced selling down here, you probably have some regrets, right? So for those waiting for confirmation or a higher up entry, not that there's anything wrong with that. In fact, nothing wrong with that at all. But I think that would be most clearly triggered above 55k. Okay, so reclaim the range. At that point, you get some invalidation to work with. The best resistance on the chart has been essentially conquered, right? And up we go. Into this area, probably worth being a bit cautious. There may be a short scalp type of opportunity potentially, depending on how it sets up. Not one I'd be terribly interested in taking, aside from maybe a take profit for existing positions. But for our, given this is a weekly show, I try to sort of focus on the bigger picture. Bigger picture wise, retrace the origin of the dump, the pre-breakdown range at 55 or thereabouts, probably good to go, right? And where's support? As we said, 51, 52. All aboard bullish, breaking down below here, sucks. In between is our range. What do you think? Does that make sense to anyone? Marcus says, if you live in a different time zone, the candle broke the support. So is your analysis bullish or bearish because of time zone? I don't believe it's contingent on time zones. So most exchanges and candle close, etc., use UTC, which is like Universal Coordinated Time. And the candles close kind of at the same time on data feeds for the most part. So we use kind of UTC for consensus as to which candle closed when and what daily closed when, etc., etc. So there's not a kind of, you know, the old joke, like, oh my god, China is like whatever hours ahead of the United States. Why didn't they warn us about 9/11? You know that, you know those types of jokes? It's sort of a similar version there. No one's ahead of anyone else. We're all looking at the same stuff. Someone says the music is too loud or distracting. Chat, music up, down, or keep? Let me know. Up, down, or keep the music volume. Keep, down, keep, 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 keep. A little down. Okay, everyone's... I think keep is winning. Up only. Sweet. Okay. Nice to see the chat is alive and well. So yeah, that's pretty much my take on Bitcoin right now. I don't have any reason to be terribly scared for the time being. I had a crazy day today. Maybe we can go into that later. But yeah, that's really it for the time being. A little rant, a very short one, of course, is that it's no surprise you get these sorts of crazy liquidation moves. Like if I pull up Coinalyze and refresh, I really like their stuff, by the way, coinalyze.net. Like that's 2.8 billion just in long licks today. And I think Binance accounted for 1.3, 1.4 billion of those liquidations. And I found out today, because I don't use Binance futures, I knew about the leverage, but it turns out when you enter a Binance futures leveraged position, by default, it puts you at 20x leverage and cross margin, which is insane, right? Because what that effectively means is that a 5% move against you will liquidate not just the position, but your entire portfolio, right? All the collateral that you have with the platform, or with the, in your balance, basically, which is completely just inappropriate in my view. Like, no one should be using 20x leverage. And again, it's the old thing that it's not leverage that it's important, it's your position size, etc. But you can still kind of get an understanding of how much risk or size someone takes on based on the leverage. Most of my trades are barely over 1x, even if I'm trading leveraged moves and short time frame moves, etc. Like, it's not a tool to get a small account to turn into a big account, really. It's not. If I use 2x, for example, I'm sweating, right? Because, yeah. So 20x default and cross margin default is a formula for disaster. So if you trade there, at least be sure to move those things around so that you'll maybe have isolated margin and use lower leverage as a default. Like, it's always advertised for 125, the highest leverage is advertised, but it doesn't really mean anything. It doesn't mean you should use it, right? So that's Bitcoin. Let's kind of see what happens. There is a bid. We've got a bounce from this daily level. I'd really like it to go from one level to the next, from A to B. That would be cool, and then kind of see what happens. But as I said, I think in another live stream, what typically happens when you get these big liquidation runs, it's not the liquidation run itself that's the deciding factor. It's what happens after the liquidation that's important. So if you have like just as an example, you have your big liquidation run, right? You get some forced selling and a bounce as a result, and then the market kind of just consolidates and then starts getting slammed again, right? That doesn't mean that the liquidation's here. It was like, oh, well, weak hands have been shaken out, now the market can go up. It really depends what the participants who were getting fills down here or who weren't liquidated, kind of how does the market react to that kind of washout? And if you get this type of any bounce gets sold scenario, that's where you know that this is probably leg number one and you have leg number two coming at some point, right? And of course, the opposite is true, that when you get those liquidations and then you get really sharp buying off of the lows and stuff like this, just shit that starts to run away from where the liquidations peaked, that's obviously a lot more bullish. I know that's a way of saying if it goes up more, it's more bullish, but I think contextually it's important to know when to look to the market for hints as to where the next leg is going to take place. I think we have the same with DeFi altcoins, right? There's a bunch of liquidations and then they basically V-reversed. So definitely worth keeping an eye on. Let's talk about ETH BTC. I do trade with margin, yes, but most of my trades are like 1.2x leverage, which doesn't mean anything, but just to give you a relative idea. Cred, what are some hints on leg direction after Lick event? I mean, price action is one of them. How is the market responding to bounces and low time frame areas of support and resistance? Looking at how altcoins are reacting can also be helpful. Are they bouncing, and what are they bouncing to or through? Looking at how much open interest was wiped, where funding is at. Has it been normalized a little bit? Has it become a bit more reasonable? Looking at the premium, right? Sort of are spot exchanges actually trading ahead of derivatives exchanges, etc., etc. That sort of stuff. For me, it's mostly price-based and a few of those other things. So as for ETH, and we'll look at ETH, BTC, USD, and then go back to the chat to hang out. If you prefer these kind of slower moving, chill vibes, like the video, but also let me know in the comments, because I can tell you now I prefer it as well. Moving at maybe 10 miles per hour, not 100. So thanks for being here. Let's continue. ETH BTC has just kind of been disappointing for some time now. And again, yeah, it's been, I mean, straight up, it's been going down for many weeks. So there's always that, right? Number go down for weeks. Maybe not great. But the context behind it also sucks, specifically, right? Because we essentially had, at least on a closing basis, a multi-year range breakout here, right? So the expectations were that the market's going to bloody teleport into these prior lows at 0.05 and ETH was going to outperform. And this kind of roughly aligned with ETH USD breaking its all-time high. So the stage was set, essentially, but it's kind of been a flop since then. Now, yes, it's essentially landing in an area of prior support now, so on and so forth, but I don't really care. I think if it wants to get back above this, game on. But for the time being, the most compelling narrative for me was this super high time frame range breakout, and it hasn't played out. So I'm just gonna chill until it gives me a reason to believe that that kind of high time frame trending move is going to happen. So yes, there is support approaching pretty much now-ish in ETH BTC, but I don't really care until it does something like this, and then I can get on board a multi-week trending leg outperformance, etc. But for the time being, the most compelling thing I'm following is the failed multi-year breakout. So until it fixes that, whatever, right? Jeff makes a good point. ETH has also suffered from a narrative point of view, right? Higher fees, locking out a lot of participants from interacting with smart contracts, playing around with DeFi, just even transacting ETH, right? We've seen, I mean, Binance basically nuking ETH with their network congestion, limiting withdrawals, corporate warfare type of thing going on. Binance Smart Chain, both BNB the token and also just the projects on there, going mental, also in a way that's affordable to more people. So the priced out participants had a new home to go to where they could actually speculate. So both the technicals and the narratives just didn't align particularly well for ETH. Certainly, it wasn't helped looking at ETH BTC by the fact that Bitcoin was getting its Michael Saylor billion bid, Tesla, etc., etc. That's pretty hard to keep up with in itself, right? So you create that obstacle of keeping up with Bitcoin is difficult, then you basically pull down ETH and have Binance nuking it. I mean, what more can you kind of expect, right? So that's ETH BTC. If it wants to reclaim the breakout level, fantastic. I'll be on board. It's in an area of support now, but I think the breakout reclaim is much more interesting than trying to knife catch 3 or 4 weeks of down. As for where this support comes from, shouldn't be terribly surprising. We know it's a weekly level, but it's basically, I mean, this pre-breakout, right? Impulse, consolidates impulse. That's where it's sort of landed for the time being. Cool? ETH USD. How many trades per month do you usually take? Oof, it really depends. Recently, at least one a day, at least. How many of those are Bitcoin fiat pair? The majority of them are trading Bitcoin against a stable coin using futures. How did I get into crypto? Someone paid me with Bitcoin in 2015, 2016, something like that. I don't even remember anymore. And then I started paying attention early 2017. Joined crypto Twitter March 2017 using my real life account, and then joined crypto Twitter later in the year. We will look at XRP BTC. Are you a scalper or do you take swings? The answer is yes. I do both. So most of my trades follow a pretty basic formula for the most part. So I'll trade a high time frame level, first reaction into a low time frame target. So this is my kind of short-term strategy. And then my long-term strategy, or the swing trade, is again a high time frame area. Doesn't really matter first reaction, I just trade the level when it's appropriate. Usually not the first reaction, but whatever, into a high time frame target. So this ends up being the the scalp day trade side of things, where I'm pinging from level to level. This is the swing trade model. You can see what they have in common is in both cases, they are premised on a high time frame area, level, structure, whatever. The only difference is, what am I aiming for? Aiming for a small bounce for a reaction, that's to a lower time frame target. Aiming for a swing or a big move to a higher time frame target. Often, these end up being one and the same trade. I'll take the high time frame level to the low time frame, then it comes back to the high time frame level to retest it, and then I'll take it to a swing target. But recently, it's been a lot of the first one. How old am I? I'm 24. Cred, please. I don't understand what you mean by trade high time frame into a low time frame target. I've got a video on my channel which is called FTA, First Trouble Area, and I give an entire framework for that, basically. Awesome there. I think you'll have a much easier time if you just search CryptoCred FTA, and there's a whole hour-long video on that. Let's talk about ETH. ETH. So given ETH BTC is less attractive, my requirements for ETH USD are going to be a bit stricter, so to speak. Truth be told, I haven't looked a ton at this chart, to be completely honest with you. Not recently, anyway. Ooh. I mean, we can make the same determination as we did for Bitcoin, right? Which is map out where the most recent breakout took place, and then look for that area to be re-established as support. So... Great job, young man. Thank you. I think on the daily time frame we can do something like this. This lowest close and this highest close, and essentially treat it as a cluster, right? So this was the range before the breakout acted as support, and so if the market's bullish, it should be reclaimed and acting as support once again. So we can even label that and keep it for future reference. Daily and daily. This is roughly what we're left with. I don't think it looks too terrible. At least these levels don't. So the only other two levels I'll add is this daily here as the lowest close, and then probably the all-time high breakout level. We can't really ignore that. Okay, cool. So kind of similar to Bitcoin, I think we have a short-term well, who knows about short term, not even going to go that far. We have some sort of range formed between these two daily levels, which consolidation, breakout should typically act as support, didn't and aren't at the moment. So that's our topside target or resistance. And then support on the daily time frame, which is kind of close to price. Because again, we have the all-time high sort of breakout level at 1400, but we want something closer to market on the downside. And we know there's a daily level at 1600. Thus, we have a bit of a range to work with coming from these daily levels. On the downside, 1600. On the upside, essentially 1800. So here. And I think we can draw similar conclusions to Bitcoin dollar, right? If the market's bullish, we want to see a reclaim of the breakdown origin, right? So basically through 1800, 1850s, turn resistance back into support, and then there's a good chance we get a continuation entry towards the highs and then higher. So you basically have a shelf, flip it, good to go. On the support side, if you're buying nukes, ideally before the all-time high retest, 1600 seems to be a reasonable candidate for that. But again, context is important, right? It looks similar to Bitcoin. Like you have a level here, which should have been support, acting as resistance, reclaim it, you're bullish. And then you have a level here, which is your range low, bounce zone, etc. Anything in between is ranging, right? So structurally, it's analogous to Bitcoin. But as always, if ETH BTC looks like shit or doesn't look strong, then taking the Bitcoin dollar trade as opposed to the ETH dollar trade will probably be more attractive, if that makes sense. And just generally, a market which breaks its all-time high, the less time it spends retesting it or even being close to that level, the better that is. It really shouldn't be coming back here. I'd really hate for that to happen. So that's kind of the, I mean, it's 4 levels, right? Nothing too difficult, I think. Top side, 1800, 1850. Range low, 1600. And if that fails, the kind of bigger unwind target lands at around 1400. These prior highs and the daily level as well. Once again, directionally, where are we? Are we at this retest level? No. Are we at support? No. We're kind of more or less, at least on a high time frame basis, in the middle of nowhere. I'm aware we're into these lows now, but this is kind of where you get chopped up. I think the high conviction plays, at least for me, come from high time frame areas, as you saw from my little flow diagram. We should be either here or here, right? Just like for Bitcoin, it's here or here. And I'm in a long right now, so I hope the market does nothing too crazy while we're streaming. But that's ETH. So yeah, that's kind of it. Let me jump back to the chat. Do I pay attention to the volume before entering or exiting a trade? Asks Mario. I do not. Cred, any video on how to properly take profits? Yes, I have a video on my channel called FTA, First Trouble Area. And that has my profit-taking methodology there. Casual Friday, nice name, says, right now, after the bearish day, is it reasonable to keep a percentage of the whole portfolio assets for a day or two in altcoins, if they are still in favor to the X coin BTC pair, in opposition to just going back to BTC? If you have a case for the market bouncing and you can stomach the risk appetite, which would mean altcoins are going to go lower than Bitcoin, but also bounce harder than Bitcoin, then yeah, I don't see anything wrong with playing a market recovery via altcoins if you have the appropriate setup. Like we see with some of Sam's coins, Solana and all this other stuff, Serum, they're just mooning, right? So I think there's definitely scope to play altcoin bounces as a kind of proxy to the crypto market recovery, for sure. Just make sure you're sizing appropriately. I've had a couple of friends get trapped in massive altcoin positions, which was a total pain in the ass for them to manage their way out of. That's the benefit of Bitcoin and ETH. You can size pretty comfortably and it's pretty nimble for the most part, and altcoins don't always have that same benefit. But yeah, I don't see anything wrong with that framework. Casual Friday. Hey Cred. Hi Bullish Vitalik. What do you think about on-chain analysis, specifically NUPNL? I don't know is the answer. I haven't looked at it enough. I haven't looked into the methodology, the falsifiability, its predictive power, any of that. I listen to a few smart people who seem to have a reasonable understanding of how the on-chain stuff works, but it doesn't play a large part in my system, to be completely honest. Ankit, could you please walk us through your most recent trade? I mean, if chat wants to, I can run you through the 2 main trades that I took today. So I can do that if there's an appetite for it, or we can just continue with altcoins and charting what you guys want. Let me know if you prefer to go over your altcoins charting or some sort of trade analysis stuff. Meanwhile, I'll open up a window. Okay. Sebastian says, how has day trading full-time affected your health? Any sleeping issues? At certain points. In the last 2 months, it was pretty bad. When the market was just going absolutely vertical, Asian session was volatile, etc. Yeah, that affected my sleep and health. I've been a lot more balanced with it recently. So, you know, I think the market is really good at giving us excuses if we want them. But at the same time, if you're strict enough with yourself and set some rules for you to follow, you can still keep some semblance of balance. Okay, I mean, the 2 main setups I took, one short side and one long side that I'm in right now. The short side setup was within... I mean, I was trading linear futures, the FTX contract. We'll go over the Coinbase chart. Doesn't really make a difference. The structures are the same. It was within this candle here on the short side. And the basic... Actually, I could talk about 3 trades, right? One overnight, one earlier in the day, and one that I'm in right now. So the first one was a kind of overnight level-to-level play. Really boring. I left a limit order to buy this range low and to get out at this range high. Again, not a massive move percentage-wise by any means, but if you're limiting in and limiting out and your size is appropriate, it can definitely make it worth it. So that was literally from A to B, long side. That's it. That's it. That's literally the trade. So then as this was happening, I was potentially looking to rebuy that same level that I bought earlier, but then saw this breakdown candle, hourly close below it. So literally left a limit sell at the level itself. Bit more clear on FTX, for example. So I sold the underside at 55.2079. My exit was a mess. Like, it really wasn't good. My target was initially to close out at 52.51. The same area here, which was my first trouble area. As the market started nuking and making this wick, I didn't have a limit take profit here, right? I was monitoring the position. As it started nuking, what I should have been doing is marketing out or layering out, whatever, just getting out of the position here. And then FTX also went down and a bunch of exchange data wasn't loading. It was a bit rough. I ended up getting an exit, more or less at the level I wanted to sell in the first place, but missing out the nuke leg to the downside, right? So sold the underside of this level, held through this, but then ended up cutting the short back at the level I planned initially. So, I mean, that's okay still. Very hard to complain about. But missing out here and not closing out is definitely kind of a mistake, right? Because I think you either close at the first trouble area, or if it surpasses your expectations, you take advantage of that, the gift from the market, and just get the hell out when it's doubled past your target. I kind of went neither here nor there. Ended up closing in an area which made sense, but having missed out on the biggest leg during the day. So that was the short close. And then the position I'm in currently is the one I mentioned on the weekly open live stream. And this is just a point I think worth bearing in mind generally. A lot of the time, if a candlestick closes significantly away from the structure that you think is significant or that you think it's trading from, it'll very often come back and retest that structure or fill out some of this candlestick or some of the wick that was left from the candlestick. So this is a perfect example, right? So we had or have resistance up here, support up here, forget this overextension stuff, etc. And then you get the 4-hour close up here. Now, if we just delineate where this level is, right here. Now, is that close anywhere significant? Well, no, right? It's far away from resistance. It's far away from support. But what a lot of traders will do is they'll always wait. And they'll see this, just this wick and the close as a reaction to the level of support and enter on the candle close. And to be completely honest with you, I think that's one of the worst strategies that I've seen, given I used to trade it myself. So what you'll see is, you see this on any asset, support, resistance, whatever, it really does happen a lot. So you have a level, let's take this 52.51 example. Price comes into it, and no one wants to buy. Like, where's the best place to buy this level? Technically, your risk reward is optimized when it looks like it's about to take a huge shit, right? Like, really, if you want to trade the level, this is the best entry you're going to get on paper. So that's where I like to get involved. Like, whenever I trade levels, I trade the level itself. I don't trade the confirmation. I don't trade the candle close. If I say I want to buy a level, I buy the level, or even a bit below it if I think I can get a wick entry, right? So what a lot of traders do, because they don't want to embrace that element of uncertainty, what they'll do is they'll wait, right? Nothing wrong with waiting, but consider the following. So they'll wait, then the market comes up, reacts to where they should have been entering in the first place, right? The extreme, and then offers them a kind of bullish candlestick close at support. Say it looks like this. This is the candle. You get a tall wick into the level or area they want to buy, and then the candle obviously closes here, right? So this is the candle close. And so they see this candle close and they think, awesome, right? It came into support, it bounced, and now it closed above support. I'm going to long this candle close now that I have quote unquote confirmation, right? Now that I've got confirmation that support has held, I'm just going to buy the candle close and the market's going to go straight up. Easy trade. Absolutely no thinking required. The market's done all the hard work for me. Okay? Now what often happens to those types of traders is as soon as the candle closes, what it'll often do, and I'm sure you've been on the receiving end of this, it'll start diving literally straight off the candle close back into the level itself. So immediately, any of those complacent candlestick entries, they get pressured. They're underwater from the get-go, and it retests where they should have been buying in the first place. A lot of the time, the really shitty traders, what they'll do is they'll wait for this candlestick confirmation to close, and then, this is the worst of all, they'll put a stop loss at the low of the candle, right? Now think about this objectively. We've ascertained that this is a level you want to buy, right? Now look where the stop loss is. It's here. So you've put a stop loss at support, even though you said it's a level you want to buy. So if you get stopped out, or if price goes here, you end up selling, right? If you're stopped out of a long, you have to sell. You end up selling the support you wanted to buy. It makes absolutely no fucking sense, but it gives people this sense of control, this illusory sense of control, that, oh, well, the candlestick close is good, stop at the low, and number go up now. It's horse shit, to be completely honest with you, right? Not a good way of trading. I know, I used to do it. So the point I'm getting at is, a lot of the time when you get those candlestick closes, the market will still retrace and come back to the structure itself, right? So it's only a difference of at what point are you trading the level? Are you going to do the first hit and you get the immediate bounce? So this could be a trade in itself. Or are you going to buy the retest once the candlestick entries are in a bit of trouble, right? But entering here in the middle of nowhere, only to stop out and sell the support that you wanted to buy, just doesn't make a lot of sense in my head. Do you kind of see what I'm saying? So as a result, that's kind of where you get this stuff a lot of the time, where you get a candle close that takes some way that occurs a little bit away from structure. Low quality longs pile in, thinking, okay, well, finally I've got confirmation. Now it's just going to go straight up. And then what the market will do is it'll pressure them by diving right back into structure and trading there again before maybe eventually giving the move that was expected. So that was essentially my entry here. Normally I don't do this kind of stuff. I normally just go one level for my full size. But I bought half with a limit order here, immediately underwater, and then the other half at the range low. So average ended up coming out to around here, and I want to get out somewhere in here. If it comes back to retest, that's fine. Any weakness below is unacceptable, and I'll cut. So that's kind of where I'm at right now. Basically, entry between these two levels, targeting somewhere around here. Invalidation, basically weakness. Does that make sense, chat? Was that pattern familiar? Did that kind of bring back any shitty memories from buying candlestick closes only for the market to come back and test the level you should have bought in the first place? Because trust me, I've been there. I spent years trading like that. Well, like more like a year and a half, but it's just not the way. So this is what I mean. If you want to buy a level, this is probably the best advice I can give, and I hate giving advice, not financial advice, etc. If you want to buy the level, if you want to buy a level, buy the fucking level. Don't buy the confirmation off of the level. Don't buy the candle close off of the level. Don't buy the, you know, the queen sends you a personalized telegram telling you it's safe, enter support. The type of certainty that you're looking for just doesn't exist. So the best you can do is benefit from maximum risk reward from trading the structures that you think are important. In my opinion. And people will disagree, and very smart people will disagree, and that's totally fine. And especially if your level selection is very bad, then that might cost you kind of going in blind, essentially. But there's a reason I trade mostly high time frame stuff, even on low time frame, even for low time frame rotations. You know? So yeah, those are essentially the three trades. It's been a good day, to be completely honest. I'm reasonably pleased with how I've played this so far. Less pleased about not cutting a short here. But whatever. Live and learn. Mo says, then why not just leave limit orders with stop losses? Yeah, I mean, I had a limit for 50% here, 50% here. Those were limit entries. Cred, how come your clear, simple strategy works in a hyper-competitive environment? I just trade what's obvious, and the market really likes obvious things. People love to come up with these really convoluted narratives about, oh, this won't work because everyone is looking at it. Or everyone wants to buy X, therefore it'll go to Y. It's just bullshit. It's not compelling. And part of the reason is when everyone can talk a big game, like, oh, when price retests this, I'm definitely selling this level, mate. Put my nan's house on it. But of course, when it actually flies into the level, they just pull their orders, right? It's all talk. Execution is something entirely different. I've been doing this for years, and I still trade really obvious levels, and they still work. There's no mystery. The actual difficult part is in the execution, the management, being able to stomach wicks and not stop out at the level you bought, and all this little nuancy stuff. But on a fundamental level, in terms of, no pun intended, in terms of the kind of stuff that works, it's really basic stuff, you know? So yeah, that's the trading side for me for now. We'll see what happens. We'll see what happens. And yeah, hit the like button if the chill vibes are more your sort of deal. Jordan says, how do you define support when you have a previous wick that is massively down? I ignore it. This is a liquidation-driven anomaly that almost doesn't exist in my mind. I look at the closes, and that was within structure for me. Okay, sweet. So one thing that I think is worth doing for anyone, everyone, is to go to, create a watch list with indices, right? So FTX is a bunch of indices which track the market. They've got a DeFi basket, altcoin basket, mid-cap altcoin, low-cap altcoin, exchange tokens, and privacy tokens. And one of the first things I do in my morning routine when I sit down to do markets, I'll look at Bitcoin and ETH, and then I'll just drop over to the indices and see who's performing well, who's performing badly, what's holding up relative to other parts of the market, and that just allows me to get a decent overview in terms of expectations. Another cool thing to do is on down days like these, actually see what's holding up best relative to all the others. So for example, DeFi perp and mid caps are the strongest performers today on a relative basis, right? Because they dumped less than all the other stuff. So if the market, say, continues to bounce tomorrow, it's a green day, whatever, that'll probably mean because they dumped less, they have relative strength, right? So when the market is strong, we can expect DeFi perp and mid caps to be the ones outperforming. So it's not really the case that, the market looks weak and you're like, oh, well, altcoins are getting wrecked, so I shouldn't pay any attention to them. I mean, you should, by looking at which ones are dumping less or least. And so when the market does bounce, you know where to look to play the catch-up trade. Manny says, how did your stop loss not get wicked? Because I entered after all of that stuff, right? I wasn't entering the long here. It was on this leg. This leg was my trade. Not here. I was short into this, ended up closing way higher, and then this was the long, once this is played out. Simon says, Sam's leverage tokens seem less likely to get me wrecked than trading on margin. Is that true? Honestly, Simon, I haven't looked at the specific specs of leverage tokens and how they're calculated, how they're rebalanced, etc. So it would be remiss of me to comment specifically on leverage tokens. I don't know is the answer because I haven't traded them. So yeah, that's me. That's me for now. All my trading stuff, kind of what's going on. I want to talk about, when it comes to altcoins, we'll do your requests in a moment. One thing that's been popping off, or several things actually, all of Sam's coins have been mooning, right? So if you look at Serum, doesn't look like there was any dip, right? I mean, it's just gone absolutely mental. Sol, also, oh, I had limits here. God damn it. Well, off it goes without me. That's tough. Sol is up. There's another one, Ray, which probably isn't up yet. All of Sam's coins are up a lot. FTT is one I'm really interested in for a catch-up play when it comes to altcoins. If you look at FTT, and if you weren't aware, Sam did this interview where he said a majority of his net worth is actually in FTT, which is an incredible statistic, also very hilarious. This coin kind of just goes up, right? So first thing, strong trend. Second point, let's say you want to long this, right? In my view, you essentially have like two good options. One is you long it within this range for trend continuation higher, or you wait for the 30-40% nuke into the pre-breakout area and buy it there. At the moment, it doesn't seem like this is hugely likely, but also the good thing is if you're getting long in section 1, then you can just invalidate and do nothing all the way until it gets to the second point, right? So I think that is 30%. Yeah, so it's like a 40% pullback, doesn't seem hugely likely, so we may have to get comfortable with the idea of doing business closer. Is Holy Perp? Yes, Holy Perp is on there. Incredible. Thank you so much, Simon. Yeah, there we go. Yeah, I mean, you can see, right? It's, everything else down 3 to 9%. Holy Perp up 9%. So I quite like the idea of FTT for a kind of trend continuation play. It kind of looks like it's setting up already to some extent. But either way, this has already pulled back from high to low around 20%, which is a big pullback for something that just goes straight up, right? And this thing doesn't tend to range for very long, right? And when it does, these ranges just tend to break out very bullishly, right? For the most part, trend. I mean, you got a dip here, trend, sideways, trend. This looks like the sideways period, and I want to catch some portion of this leg. I think there are two reasonable ways to go about it. The first is the good old breakout play, which would essentially be to find resistance, maybe this highest close here, at around 35, and then any strength through 35, right, something like that, would be your continuation entry, probably towards 40 as the first target, just using round numbers there. Okay, so that's your kind of buying strength setup for FTT, which may be reasonable. At the same time, the pullback one, I think there's a bit of a range low, underside type of thing going on in the low 30s. So you've got lows, 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 right? Retested it a bit here. Seems to be breaking out now, which is interesting. But more broadly, if we just kind of generously delineate this area, maybe something like this. So you've got support, support, breakdown, bearish retest fails, right? And we know that when bearish setups fail, that ends up being bullish. So something like a pullback into the 30s, as long as it doesn't just mess up this structure which it regained. But long story short, you have a range, right? Support in the low 30s, resistance in the mid 30s. The continuation play looks like this. The pullback trade looks something like this. Okay? But I think FTT, if anything is going to recover, it's going to be the stuff that just goes straight up. And FTT is even lagging relative to some of like Sol, Serum, etc. So I could definitely see a good market recovery bounce play on this. Either the range reclaim pullback or the breakout play. What do you think? Does anyone else fancy this? Does this make sense? Do you trade FTT? Sam is a surface-to-air missile, yeah. Did you look at the new Sam coins, Feeder and Ray? Yes, they're just going up a lot. Which is good, right? We like stuff that goes up a lot. At least I do. FTT is FTX's native exchange token. Sam is the CEO of FTX and Alameda Research, I think. Sam Bankman-Fried? I don't know. FTX CEO. Someone says, can you look at FTT versus BTC? Good question. We can, of course. I mean, this looks like it just wants to break out, right? Look how bullish it is against Bitcoin. I mean, ever since this has gone, up only, right? So that's good confluence. Strong against Bitcoin and a range reclaim in the USD pair. I think that would look good. Sets up really nicely for continuation. So that's what my eye is on for the time being. We've had a few questions about Litecoin Bitcoin. Let's take a look. Even though I hate this pair. So just to set some context, this is, if I were to show you this instrument, you would say that it's trending down, and this is a monthly chart. So it's in a multi-month, multi-year downtrend, right? That's the first thing. So then the question is, are there strong signs of reversal within this high time frame downtrend, which would typically be, for example, a lower low and then a higher high, right? That for example, would be a good evidence of reversal, some sort of breakout, resistance break, etc. Do we have that in Litecoin, Bitcoin? And the answer for the time being is no. Even if we just take our basic, forgetting the multi-year trend thing, if we look at our basic support resistance type of structure, overshot once, found resistance there recently, and seems to be poking below the range low. So LTC BTC looks weak until proven otherwise. Proving otherwise would probably be either a strong reclaim of the 45 level, something like this, or just any sort of higher high on the weekly, something impulsive, and then we can probably talk about this level, and then, you know, coming into previous areas of structure. But for the time being, we've got a multi-year, multi-month downtrend, and even the weekly time frame is respecting resistance. So not hugely keen on the BTC pair for the time being. Pretty Panda, is this probably the worst looking chart in the entire crypto space? It must be close, right? It's got to be up there. Chat, why don't you tell me what's your highest conviction altcoin pair that you're either trading or have traded or just enjoy trading? Maybe you're in it right now. Tell me, give me your shitcoin pairs. Ideally against either BTC or USD. I'm seeing Sol. I'm seeing Sia coin. The screen is moving very quickly. KSM. Also, let's get to 200 likes. We can do it. We can definitely do it. BQX. ADA. QNT. Ooh, what are you trading that against? BTC? Ren, Comp. SXP. And the last one, Algo. Thank you for your submissions. We'll do more. Every single stream we'll add to this list and go through them. Let's chill out for now and go over these. Thank you for your submissions. I'm sure you can understand I can't do all of them. But if you join a paid group, I'm sure there's a chart monkey in there that will do it for you all day long. Unfortunately, that's beyond my very limited skill set. So let's look into these. Sol, I mean, this is just a Sam coin that's going up a lot. There's really not much else to say. I think really aggressively, if there's a pullback to this base at around $11, that might be your quickest ticket to continuation. Bearing in mind you don't want to particularly get stopped out here, but around $10, $10.50, the pre-breakout cluster, a pullback into that range, either the top side, the bottom side, doesn't really matter. That's probably where you're going to get your quickest continuation move. Otherwise, just up only, right? So that's Sol. If I had to put a level on it, I mean, probably the top side, 11.5, something like that would be super cool for aggressive continuation. But it looks good, right? It's breaking out against everything. Take a look against Bitcoin. I imagine it looks good as well. Yeah, no surprise there. I mean, it's into a bit of an area of structure, actually. Into prior support turn resistance. So, daily close through this region here. And that'll probably be a good place to add if you're already positioned for continuation against Bitcoin. Range low reclaim into the range high. That would be cool. For the USD pair, quickest pullback between 10 and 11, at least on the daily time frame. Sia coin. I'm assuming it's against Bitcoin, you said. This is like a proper old coin. I'm not seeing a huge amount that really jumps out at me, if I'm being completely honest. Definitely up against USD, which is nice. But again, if the majority of your portfolio is in Bitcoin, and I'm assuming you're not trading Sia Coin linear futures anywhere, we want the BTC pair to look good to justify a meaningful allocation within our portfolio. And this isn't quite there yet for me. Seems like it made a lower low, bounced into a previous area of structure. Nothing really outstanding at the moment, but yeah. That's Sia Coin. Kusama. Yeah, I mean, that's a strong breakout, right? There's not a whole lot to add to this. I mean, the bread and butter one, if you're really aggressive, is just a retest of 250s, the origin of the breakout, like a wick into here and then continuation. If you're feeling lucky, there's probably some sort of trend line structure that you can superimpose on this chart with a generous interpretation and catch nukes within it wherever they may land. And I think if the trend line fails, then you probably have a larger pullback at hand. But this is just broken out. And when that typically happens, you either wait for a bigger dip to get positioned or look for the closest area for continuation. Those are at least how I approach breakouts. The closest area for continuation is around 255, where the breakout happened. If you're a fan of lower entries, this trend line's pretty good as far as these things go, and it also provides a nice invalidation, right? If this has held 50 times and you buy it, it bounces a little bit and then fails, then you know to get out until it reaches something a bit more reasonable, right? So that's KSM. BQX. I think they rebrand. This is Voyager, right? They rebranded their token and has utility now and all that type of stuff. This is just kind of up until proven otherwise, it seems. I mean, it's so close to the old all-time high where I don't see a ton of resistance. So, I mean, just generally, continuation seems likely. We can look at it against Bitcoin. And it looks kind of similar, right? You had the prior range low. Being very generous here. Something around here. Support, failed breakdown, reclaim, mega moon. And now look, it got stuck at this level, just ahead of this level a little bit. And now this looks like a weekly breakout and reclaim. This looks good against Bitcoin, at least into this area here. But if the USD pair continues into price discovery, it'll probably keep going. Again, as far as I'm aware, there's some helpful rebranding type of stuff going on to add utility to this. And, you know, the exchange is making the most of that. And also, I think Donald's got a huge bag. So I'm rooting for him as well. That's BQX. ADA, this is just kind of going up, right? That's great. It's not in a bad, like where at wick 2 is pretty reasonable. I think if you're chasing this, you want this area to hold more or less 90 cents. Again, the cluster impulse, consolidate impulse. You want that range to hold. So upper boundary, oops, I don't know where everything's gone. Upper boundary around 90 cents, 93, whatever. And then 84. You really want that to hold. If that fails, then I think there's a long way down until you reach something meaningful. But hey, if you're positioned and trying to play the continuation trade to $1 and higher, you got a pretty tight invalidation at around 85 to 90 cents. That's against USD. Looks fine. ADA BTC. It's like in an area of resistance, so it's kind of worth being cautious on the USD pair, just because it's into these prior lows. But I think if you get a weekly close that takes price, I mean, technically already has, right? I think you know what? With ADA, Donald and I tried to include it into Technical Roundup, but we just got a bit stuck because you technically have resistance here, but then this cluster could also get in the way. It just got a bit messy. I'll just say it looks decent. As long as it doesn't lose this weekly level at 1881 against Bitcoin, continuation seems decent. I assume most of you are trading the USD pair, which makes life easier. And the USD pair basically says, look, price broke out of a range. As long as the range holds, fantastic. If for any reason it fails, probably worth getting out, because there's a lot of hot air and smoke until the next real horizontal structure worth paying attention to. So to be clear, this needs to hold. If it doesn't, probably a slightly steeper drop towards the old range. And again, you'll know for me, support is built horizontally, not diagonally, right? We don't like this, we like this. QNT. Against Bitcoin, it's just chopping. I don't see a whole lot going on. Even as far as you zoom out, this thing is kind of never trended in a way. There's no perp. QNT, I don't really know. Are you trading this against USD on Bittrex or something? I mean, the USD pair looks good. I mean, it's up a lot. But I can't really be useful because it's not really a commonly traded pair, right? So the data I've got to work with is pretty limited in that regard. Ren. On the perp side of things, during this dip, it landed in quite a nice area. Again, similar vibe with the pre-breakout. So that's cool where it ended up. This is kind of like a lot of the other pairs we looked at, where once it bounces and ends up in no man's land, that's the less attractive area to get involved. So I would say your choices are either to kind of replay the dip if it revisits, or play a reclaim. So on the dip side of things, if it wants to come back to the pre-breakout range, right, around $1, basically where this move originated from, this consolidation here, if it wants to come back there with like a candle body, I think that's your best risk-reward trade that you'll be presented with. As for a bullish continuation trade, if it doesn't come back here, that's a bit trickier. I mean, arguably the reclaim of 1.4, the closest support resistance flip to price, something like that may be reasonable, but I'm slightly less certain on that front. You can just see this structure here is like slightly messier. So if I had to trade this, my preferred approach would be to wait for this wick to be revisited, come back into the range that led to this massive breakout, love to do business at the structure, and then hold for a huge bounce. The reclaim plays aren't as clear to me generally. Comp. USD pair moving sideways. That's kind of it, right? You can just see it's been ranging for, looks like a couple of weeks now. I mean, the range is intact, which is cool. Obviously, range breakout takes it higher, no surprise there. I don't think the USD pair is necessarily built for strong views at the moment. It's kind of neither here nor there. Moving sideways on all time frames. Range low being respected. Range high being respected as well. You may be able to fish for a dip within the pre-breakout consolidation in a similar type of way, but not super high conviction on that. So kind of just sideways. I don't want to read into it too much. As for the BTC pair, where do I go with this? I mean, the BTC pair looks decent. I'd say it's at an area of support. This is kind of market structure I really like. Low, high, lower low, higher high. So it looks like it could be gearing up to outperform against Bitcoin in the next week or two, assuming this level holds. And that would be confirmed or reflected by a breakout in the range of the USD pair. But this is just super choppy. So any sort of maybe higher high or just generally range breakout, that'd probably be a lot safer. Otherwise, you're just stuck paying funding and fishing for wicks. So that's comp. SXP reached weekly resistance, reacted to it. So that context is worth being aware of. I'm kind of ambivalent. I don't know is the answer. I'd say I'd be cautious up here because you risk essentially buying the reaction to weekly resistance, which always sucks. At the very least, it can go against you. this pair is, I mean, look, it's just this messy cluster of resistance here that it's into. I'm not a huge fan of how it looks right now. I mean, eyeballing it, probably, maybe you get a bounce off the lowest close at 221 for support. But really, if I had to trade this, I'd be cautious kind of up here into prior highs. And it would really have to come back to like a very decent level, like 1.1s or thereabouts, where this breakout started. That would be appropriate. Up here, far less compelling. You know what is compelling, though? Almost being at 250 likes. That's very cool. Algo. So it seems to be poking below an area which I really would like for it to hold. Which, again, with all these altcoins, the consolidations which form around breakout points tend to be really important. So we can just box that out. So for the time being, it's been lost as support. But that also opens the door for a reclaim setup if it is appropriate, right? So any strongly impulsive move through this level, which would mean that the bearish retest traders have failed, and then any sort of pullback back into it would be risk defined at that point, and then you get continuation at least into the range high, but hopefully higher at that point as well. So for Algo, I'd say it's below support at the moment. The easier trade will probably come from a very strong looking reclaim, and then any pullbacks would be opportunities into the recent highs, and then hopefully the high itself as well. And then we can look at Algo BTC to get a hint of performance against Bitcoin. I mean, it doesn't look terrible. I mean, I know it's down for many days, but in terms of structure, it's not in the worst place in the world, right? It's kind of into this prior range low here, holding for the time being. So I'd say like neutral on the BTC pair, like it's okay. If it's going to bounce, it's going to be from this area. And your best bet, or where I would feel much more comfortable, would be on a reclaim of, like a strong reclaim. Not like just like a wick that closed, you know, tiny candle closed above it. You're like, well, that's a reclaim. When you're looking at levels, you want to see evidence of real imbalance going on, right? So I would need like a strong close through, and then any sort of pullbacks or opportunities. And that could also align with the BTC pair doing well. So Algo needs to reclaim, and then highs, maybe the high. Okay. That's plenty. I think we got through a lot of content. Hope you learned something useful. If you didn't, I mean, I'm really doing something wrong, because it's been an hour, 18 minutes. Nothing useful in that time would be a damning indictment. But yeah, thanks for hanging out. I really hope you enjoyed the chill, more laid back, slower moving stream. If you did, let me know in the chat. That would be super cool. Of course, a thank you to the show's sponsor, which is Bybit. Their links are available in the description below. And I will see you on Friday, Tuesday. We've got the newsletter, all sorts of stuff going on. If you had a tough day today, chin up. The market will always be here. Knuckle down and learn your leverage, risk management, etc. And live to fight another day. That's all from me. Take care, and I'll see you a bit later. Bye-bye.